Hi, in this video we're going to work exercise 14-9. None company sells electric razors. $200,000 cost of goods sold for the month of June. Company projects a 5% increase during July. The inventory balance as of June 30th is $15,000. Desired ending inventory is $16,000. None pays cash to settle 70% of its purchases on accounts during the month of purchase. And the following month they pay 30%. So that's everything. Accounts payable as of June 30 was $18,000. All right, so what we have here is a problem that is there two budgets closely linked. We have a purchases budget and then we have the cash payments budget. So we could literally, think through things logically in our master budget, if you will. We start with sales. That's the very first budget. Then we proceed to budgeted purchases and then to cash payments. Because we need to know not only what we need to buy, purchases, but we also need to know how much cash is going to take to make those payments, even if we're buying those on account, because eventually we have to pay those accounts off, the accounts payable, right? So let's work through budget. The first one, A, which is budgeted purchases, and the second one, which is cash payments budget. All right, so it said that there was a 5% increase. So we'll do 1.05 time for July, 5% increase in sales for July over June, and June was 200,000. So times 200,000. Make sure I got 6 zeros or 5 zeros in there, 6 digits. Yeah, I think so. And I want a dollar sign. All right, so 200. Yeah, I got that right. Budgeted cost of goods sold 210,000 plus desired ending inventory. Right here, the desired ending inventory is 16,000. And let's do a comma for those. We don't want a dollar sign. All right. And then total inventory needed as a combination of those two. I'm just going to like Excel add it up, even though 226 was easy to calculate. And then we got to subtract out this beginning inventory. Beginning inventory, is that given to us also? Well, yes. Beginning inventory, it doesn't say July, but it says June 30th, which we know is July 1st amount. And really, we shouldn't put parentheses here, even though I have in prior videos, because we got the less there. So 226 minus 15 is 211. So budgeted purchases are $211,000. Let's get that in a dollar sign. Okay, so that's the budgeted purchases, or the purchases budget completed. And it says deal with the cash payments budget. Well, we owe as... Now, how much are we paying off everything? So none pays 70% in the current month, 30% in the following month. The accounts payable balance as of June 30th is $18,000. So that is the amount that wasn't paid off during June. That's the 30% left over from what they didn't pay in June. So literally, we could calculate what the accounts payable was or charged in June was, and in total, if we wanted to, as we know the math. We don't need it. All we need to know is, the only thing we need to know is 18,000. That's the ending balance or July 1st balance of payables. And now they're going to pay that all off, okay? They're going to pay that all off according to the problem. Whatever's left from the prior month is paid off in the following month, and it's a split of 70-30. So 30% of what was not paid off in June is $18,000. Okay. Now, they will pay 70% of budgeted purchases. They will pay 7% of budgeted purchases, which is right here. So, in the current month. Now, 30% of this will be paid in August. This is July, right? So they're going to put on account $211,000 during the month of July. 70% of the $211,000 will be paid off in July. 30%, we don't need to know this, but let's just thoroughly understand it. 30% is paid off in the next month, which is August. So how much we're going to pay off in the current month? 70%. And what are we charging? What are we putting on account during July? $211,000. So now we have, and then one dollar sign there, $147,700. So what we're projecting to pay in cash payments for our inventory purchases is $147,700 plus $18,000, or a total of $165,700. And that is the answer for B. Okay, so we couldn't calculate B until we had A. And the reason is we need to know how much we're going to buy, budgeted purchases, before we can calculate how much we're going to be paying out in cash, or budgeting to pay out in cash during July. I hope this helps. If you need any help or further assistance with any of these problems, please reach out to me. Thank you.